All right, let's start with Core. What is Core?
Hey everyone, Brendan, one of the initial contributors at Core. You can see it on the seats. Apparently the Bitcoin power grid. So in layman terms, it's a layer one blockchain. It's basically a Bitcoin sidechain, what we call. So it's fully EVM compatible and secured by Bitcoin. So what I mean by that is Bitcoin miners, they delegate hash rate. So they produce hash rate to produce Bitcoin blocks, as you know. They're redelegating that to help secure the Core blockchain. And there's also a staking function. So as a Bitcoin holder, you can stake Bitcoin and also secure the Core blockchain. So it's very aligned with Bitcoiners and Bitcoin itself. And the entire goal is to make Bitcoin more productive. Obviously, there's Bitcoin, the asset, which we've talked a lot about, and there's Bitcoin, the blockchain. There's not a whole lot you can do on the blockchain. You can send, store, receive. And we've seen this kind of wave of new applications on Ethereum and other blockchains. We're looking to bring those types of apps and applications to Bitcoin on our blockchain Core.
What about Bitlayer?
So Bitlayer, we try to focus on two things. We're building the new trust minimized bridge compared to WBTC, which is more decentralized. It's powered by BitVM. We're one of the first research team on BitVM. That's the new kind of technology framework to build a better bridge for Bitcoiners. We started our layer 2 network, mainnet, 2 years ago as one of the first BitVM layer 2, EVM compatible as well. Compared to sidechain, our transaction actually eventually was set on Bitcoin block. Kind of have similar value proposition as Core. We want to bring more fees, more revenue to the miners. Actually, 3 top Bitcoin mining pool miners are actually our investor and a partner. I think Fred was here right this morning. All this Bitcoin mining pool have this issue. They have a lot of AI data centers as a new revenue stream, right? But Bitcoin in the mempool compared to 3 years ago, which was very congested, a lot of fees. Now it's pretty empty, right? So how to make them economically sustainable to still earn revenue being the miners? It's a tough business, right? So we want to be very valuable, bring more transaction, bring Bitcoin more productive.
Well, what are you doing? Like, how are they getting paid? What's the extra economic value that they get?
So we built our ecosystem. All-time high, we had around 200 ecosystem projects. We generated around 15 million gas fee revenue already, around 120 million transactions. So a lot of the fees we contributed back to the bridge operators, and some of the fee will eventually on the settlement layer we're paying as a gas fee to the miners. So that's like the new revenue stream where we contributed quite a bit to F2 pool, N pool, and Spider pools. And we want to do that with other Bitcoin miners.
And over time, I guess the thinking is some of these transactions on these other networks will eventually settle on Bitcoin, driving up more fees. You've got, I don't know if we've talked a bit about Lightning Network and things, great for mass payments, but it's actually taking fees off the main Bitcoin chain and actually reducing fees in the mempool.
You know what's funny? You're the first person to say Lightning in 2 days.
Yeah. I mean, I've met a couple of people outside talking about it. So I hadn't heard it for a while.
Is it working?
But is it? I'm not a Lightning expert. I mean, I think there's some debates around whether it can actually scale because it's going to take a long time to onboard individual customers. So I think what they're finding is that may not actually be the play to get individual people like me and you to set up a channel because it's just going to take years and years and years to get everyone on that network. But large institutions, exchanges, et cetera, who are doing high volume of payments, it seems like there's a really good value prop there. But again, it's taking transactions off the Bitcoin network itself.
We are in the Bitcoin investor events, right? But maybe not a Lightning event here. Lightning is essentially a state channel network. It can solve the payment issue, but I think what we're trying to do is actually empower Bitcoin for DeFi use case. It's not just payment, right? With lending, all kinds of smart contract empowered DeFi protocol. Lightning cannot do that.
When you guys think about Bitcoin side chains, layer 2s, all this stuff, who are the people who are using this stuff? This is, and maybe what I can do is, I got a lot of questions about, I get pitched all day long from all these people who want to build all this stuff in and around on top of Bitcoin. And I always ask them 3 things. Where does the yield come from? Who is using this stuff? And how do you make sure that these people don't just show up, get a bunch of economic value in the beginning and leave? Kind of the yield farming problem that all the altcoins, et cetera, have. So maybe let's just go through those 3 things, right? Where does the yield come from? Who's using this stuff? And how do you make sure that you retain them over the long run?
Yeah, I mean, we can shed a lot of light there. So the core project's been live 3 years, and I think you have been in the space a while because you did some rootstock stuff like years ago, right? And the value prop there was like Bitcoin yield, lending, borrowing.
You know, when
this was like
you're a young person,
OG.
you know, you try everything, but you don't stick with anything. That's me. I tried it all. I looked at it all. I tried to figure out what was going on everywhere, right?
Yeah. So, I mean, I think there's a bunch of stuff packed into that question. So I think in launching new blockchains, it's been very hard to retain, you know, usage and have people farm. I think we even dealt with that ourselves. And then with this big 1010 liquidity crash, you know, alt layer ones got absolutely destroyed. And that's a whole other thing that we can go into. At the end of the day, where we've kind of ended up after 3 years is there's really two main use cases that folks are interested in, and there's two kind of segments, and we want to focus on those two products. So first of all is Bitcoin yield. I've heard like almost every panel talk about Bitcoin yield, whether it's a DAT, treasury, investment fund, et cetera. And there's various forms of that. I've talked to like insurance protocols. With Core, you can stake Bitcoin, which is using a time lock in your wallet. There is delta neutral trading strategies. There's a bunch of different things. But it's hard for institutions to access those, and they want to keep their Bitcoin in some sort of custodian of some kind, like BitGo, who I think you just had on. So yeah, looking to launch a product there that gives exposure to a variety of these strategies, that has an investment advisor, but the Bitcoin itself is held in Bitcoin custody, and that's more of an institutional product. And then you get a token, which is the value of any blockchain. You can trade in and out of it as you want. Your Bitcoin, you know, 24/7 access. You can plug it into DeFi. You can borrow. You can do all the benefits of what come with a blockchain in a DeFi market with that token that's earning yield. So a Bitcoin yield token. The other use case that we've seen, and I saw some panels yesterday on the retail side, is a lot of people just want to collateralize Bitcoin. I think initially, you know, Bitcoin was meant to be peer-to-peer money. No one wants to spend it. It's seen as a store of value, but people want to borrow against it. You know, whether you're a retail or an institution. So on the retail side, I think there's more and more simple apps. I think you'll see it embedded in fintech products. We're launching a product, you know, which is going to be a front end to a lot of the DeFi apps on Core, where users can just borrow against their Bitcoin and spend on a spend card in stables, right? And it's kind of like, you know, what any rich person does. They borrow against their stock. They don't ever sell the stock. You're basically empowering every person to do that, whether it's someone in Africa, LATAM, or America.
Where's it come from? Who uses it? How you keep them?
Yeah, so kind of straight to the question. We saw the evolution of user base. 3 years ago, when we started Bitlayer, when we launched our mainnet, it was a bunch of the Bitcoin old folks that were very active on the ordinal season. So there was tremendous of energy and attention on that. They want to use their Bitcoin, and now evolved to like a lot of the DeFi users. Some of them actually came from Ethereum world, and certainly a lot of the builders, right, build on top of the Bitlayer and other network. They brought a lot of their community on that, right? And eventually now we see from 2025, Bitcoin is one of the best collateral assets, right? So the yield come from basically are the proven DeFi yield, right? Borrow against the lending yield, stablecoin yield. You mentioned about delta neutral, all these yield. There's no rocket science in terms of the yield sources. Whoever claimed like over 15%, all kinds of yield, you bring your investor taking all kinds of excessive risks, right? So I think for Bitcoin DeFi, the yield competition is not you competing with pretty high risk kind of perpetual trading kind of DeFi yields stuff, which a lot of the Ethereum protocols claiming to do. And some of them, unfortunately, after 1010, right, they had a lot of insolvent or bad debt issue. So I think for Bitcoin infrastructure builder like us, we should never like claim all these like excessive yield we provide for Bitcoiners. And for the user base of Bitcoiners, we're competing with zero yield on native zero yield on Bitcoin layer 1. So it's better than zero, right? So that's kind of on the value proposition comparison. And I think the community of Bitcoin is getting much diverse now. It's very hybrid, right? In the past, it was just Bitcoin miners, like the people who completely self-custody, hold their Bitcoin doing nothing. Some of them are very maxi. They're never going to use their Bitcoin for any reasons. We see more and more users, right? They actually want to borrow against their Bitcoin, right? For like make their Bitcoin more productive. And obviously with after ETF, institution coming. So we're dealing with a lot of like institutional powered family offices. They manage their Bitcoin holding in a more institutional way. So they're pretty financial savvy compared to the miners we know that actually just know like the hash rate and all this equation. Outside of that, they are actually not the financial savvy. So we do see the user base evolve quite a bit in the last 3 years.
How much can people make doing this stuff? Are we talking 1%, 5%, 20%? Like what does the yield percentages look like?
So the sweet spot we see, obviously from the DeFi yield we get is around 4 to 6%. That's like kind of the sweet spot. User actually care. They want to get it. It's not like too small. For some kind of a layer 1 Bitcoin staking protocol, they can only deliver like less than 1%, which is like people don't bother, right? It's just way too small. Some of the small depositor kind of staking users, you can't even, the yield you get like less than 1%, you can't even justify the fee you pay. So sweet spot, which has a product market fit, is around 4 to 6%.
Yeah, I think there's a whole range. Our target's thinking like 2%. I think a lot of, again, because it's institutions, they're not looking to take on a ton of risk with their Bitcoin. Again, we mentioned there's a lot of ways to earn yield. I'll just talk core staking. If you want to stake just Bitcoin, and again, that's a time lock in your own wallet, literally no risk-free yield, it's like 20 basis points. So
describe what a time lock is.
Yeah, so how that works, a time lock is basically you issue a Bitcoin transaction in your own wallet to yourself, and you time lock your Bitcoin for a period of time. It could be a day, it could be a month, it could be a year. What that does is basically make your Bitcoin unspendable for the amount of time you specify the time lock. It's a basic Bitcoin function. There's not many, other functions that you can do. While your Bitcoin's locked, you're basically delegating it to Core and helping choose a validator. For doing that, you earn yield. You earn Core tokens. It's like staking Ethereum tokens. But the beauty of it is you have the peace of mind of knowing the Bitcoin's in your wallet, and there's no way that we can take it from you. It's just time locked, and you're unable to spend it until the time lock expires. We have this thing called dual staking. So if you also stake Core, you get higher yields. That's roughly 2.5%. And we've had like an ETF product focus on this that has Core and Bitcoin, yield bearing ETF, a few other folks building on top of it. It's kind of like infra that is really interesting to see what people are going to build on top of.
Let's talk about the different ways you guys build this stuff, right? I think some of these companies are very centralized, kind of traditional corporation. There's leadership, there's employees, they're employees of that corporation, and they go and they build it. There's others that are more kind of DAO-like in structure. They're kind of projects, and people are very distributed, and it's kind of, hey, build what you can, when you're available. Talk about each one of your models, and then the pros and cons of the, kind of how you set it up.
Great question. So we started as a research lab, right? We're one of the members in the BVM Alliance, first to implement on the BVM. We're essentially trying to build a better bridge. So for that, we believe it needs to be a pretty solid, centralized tech team, actually have a very clear vision with a clear roadmap, right? We had like institutional investors like Franklin Templeton and so on. Basically, we actually have a company to sign investment agreements or even asset management contract, right, with sort of like our counterparties and so on. Whereas we have the governance token, we have around 70 different validator sets, and in the future we want to embrace to over hundreds of them, right? So the token holders, we now have over like 500,000 users now. So they have like governance voting, we have the fee switch kind of structure, we build like the on-chain governance protocol on that. So eventually you've talked to the governance side, right? The token is issuance by the foundation. So foundation is like the non-profit kind of way, the structure, just like Ethereum from Switzerland. So that's kind of the structure. I don't think we want to claim as a DAO. Like DAO has a lot of like kind of ambiguity, right? There was quite a lot of controversial things going on with Aave, right, on the DAO, like how the main management tech company own a lot of the IPs, where the DAO, like Aave token holders, only have the voting rights, and sometimes the voting rights will be overrun. So I think that the ambiguity of the DAO is actually not really helping companies move forward. At the end of the day, we want to deliver the best product for the customers with sustainable yield, which they're not taking too much risks. And the better infrastructure we build needs to have a real team to running that, not just a DAO.
I don't have much to add because it's a very sticky topic.
Well, let's go.
Yeah. I've been in tech 15 years. Operating as a DAO is super inefficient and difficult and hard to compete it's like any tech. I mean, if you're running a fintech company, are you going to operate as a DAO or are you going to be a benevolent dictator founder? I would bet on the benevolent dictator founder every day. I think there's a bit of ambiguity when it comes to crypto startups and legalities and structure in the US. So obviously there's some things you need to think about. But at core, it doesn't operate as a DAO. It's not quite like the fintech benevolent dictator either. It's somewhere in the middle. That's all I'll say. Yeah.
I will say, for those that don't know, I one time looked at investing in something that was controlled by a DAO. And so I talked to the people who were kind of like the initial people who started it. And they said, okay, yeah, this all sounds great. Here's the deal structure also. Okay, awesome. So there's just one thing. We need you to get on a call with the DAO. I said, okay, sure. How do we do that? And they said, well, we're going to get on Discord. We're going to get on a call. I said, okay. And so I got on a call and I thought, everyone, when it was a Saturday morning. And so I got on this call thinking that there was going to be, 5 or 6 people or whatever. There was 900 people on the call. 900 people. And I literally texted I texted the guy and I said, do they all get asked a question? I was like, it's going to be crazy, right? And so to your point, I think I saw firsthand, how do you make decisions? How do you actually, who gets what, kind of weight, right? Is there preferred voting shares versus not? And all that stuff is difficult.
Yeah, I'm all for getting the community involved in certain decisions or stakeholders, but not every single piece of minutia, right? And otherwise, just nothing gets
And we see it in Bitcoin, right? If you look at, there's been many times in Bitcoin where you have the miners, you have the node operators, right? And you also have the software developers. And there has been disagreements. There has been, kind of all these things that kind of grind our way to a better spot. But definitely those checks and balances are important as well. One other thing I want to talk about is you all are both in technical businesses. You guys are building software. We have talked ad nauseum over the last 2 days with people who are saying, hey, we are changing the way we write software because of AI. What are you guys seeing inside of your companies right now? And is it making you better or faster? What's kind of the impact?
I got a lot to say about that. So I think, I
never seen you so excited before.
This is the most exciting thing in 2026, right? I think we had a huge run. We made over 10 million revenue being the L2. We helped a lot of Bitcoiners get yield, which is all there, right? It's proven it worked, but certain people don't need it. Certain people like it. But at the end of the day, it's a software business, as Anthony, you mentioned, right? So we wish all the AI system, the new things coming with the AI agentic engineering can come earlier, because we actually spent millions of dollars. We ran over 50 people, full-time engineering team. We built a lot of the tech with pretty high costs, right? So I think it's a life-saving for a lot of software company like us. We reduced 80% of our R&D cost in the last 3 months, and the entire team productivity and output is 2x. So it's 10x difference per person or per cost capita, right? So it's a life-saving for companies. And assuming we are in this short-term bear market, right? We need to survive. Whoever continue to deliver really good, products, solutions with low cost can win and can survive. So that's very important. And in the last 3 months, we really train every single team members to think about it. I use that every single day probably to my team members. Is this something needed for human input? Have you even checked with your AI for get answers before, right? Sometimes we need to train everybody in the team to become a high agency kind of the team member, right? To use all the AI tooling to empower yourself. That's probably one of the most important things to do as a tech company in 2026.
Yeah, we have a short on time. So I think from a blockchain perspective, blockchain programming, frankly, is just not that complicated. Some of the big technical pieces are in research, but programming itself isn't. It was more about audits. So I think it's going to help a lot. A lot of, I'm just a technologist. Generally, a lot of my founder friends find that some of these mid-level engineers are opposed to using the tech. I don't know why. I think it's just old habits die hard. I was a good friend with a group that was bought by Pivotal. They were big advocates of pair programming. If you guys remember, tech from 12 years ago, this was an approach where literally 2 engineers sat side by side and coded together. And what it resulted in was just way better work. And I think that now everyone can pair program with an agent. It's going to empower really great engineers. I think you will need less engineers. I agree with some comments from yesterday too on the Lava side that it's kind of air cover to fire your bottom 20% of your staff. I don't necessarily know if it's just AI. It's just getting low performers out of the org. But yeah, no question, it's like one of the wildest technologies, and it's going to make us hyper efficient and super exciting. And if you're a generalist, I mean, you feel like a genius. You can code up basic things in English. It's amazing.
It's magic. If I can build something and I don't know anything,
There you go. In an hour or two.
anyone can do it. Anyone can do it. All right. Thank you guys very much. I appreciate it.
Thank you.
Thank you guys.